Okay, so if I told you a struggling plant-based burger company just magically wiped out $900 million in debt and swung to a massive profit, you would probably think they figured out how to sell a lot more burgers, right?
You would? Yeah, unless you actually read the filings.
Exactly. Welcome to Earnings Unscripted, where we actually read the filings. Today is March 31st, 2026, and we are looking at Beyond Meat, ticker BYND, in their truly wild Q4 results.
And just a quick reminder before we tear into this balance sheet, this is strictly our personal opinion and not financial advice. So please do not go trading fake meat stocks based on us thinking out loud.
Right. So headline numbers, it is a mixed bag. Actually, no, it is just weird. Revenue fell 12.3% quarter over quarter, down to $61.6 million. Operating margins imploded to negative 215%, creating a loss of $132.7 million. But somehow, diluted EPS improved to a loss of 29 cents, up from $1.44 last quarter. So, Miro, how exactly do you post a $400 million net profit while the core business is bleeding that badly?
It is the ultimate accounting illusion. They basically executed a massive debt exchange. They retired 97% of their 2027 convertible notes, which triggered a non-cash gain of over $548 million. But to pull that off, they had to treat their stock like a printing press.
I was going to say, I saw the share count jump. It was roughly 76 million last quarter.
Try almost 380 million now. They multiplied their outstanding shares by nearly 5 times in a single quarter just to stay afloat.
That is staggering. And what's wild is the market almost bought the headline at first. The stock had a really strong run during the regular session on earnings day, up almost 13% to 70 cents.
Right, but the after-hours tape was brutal. Once people digested the sheer scale of the dilution and the actual operating bleed, it just dumped. It ended up with a really muted 3% net gain by the latest extended hours print.
It feels like they are throwing everything at the wall now to survive. I mean, they're literally dropping the word meat from their operational strategy. They're rebranding to Beyond, the plant protein company, which apparently now includes launching a lightly carbonated protein drink.
Yeah, Beyond Immerse. The CEO was complaining on the call about a, quote, resurgence in red meat, so they pivot to the sports beverage aisle. It's a fascinating survival tactic.
It really is. All right, let us get into the details of how this operation is actually running beneath all that debt magic.
Yeah, well, if you look under the hood, the engine is basically on fire. The most important thing in this entire release is not the debt swap. It is the fact that they flat out missed their 10K filing deadline.
Right, because of an accounting issue. I think I saw that buried in the 8K.
Buried is putting it politely. They essentially admitted they lost track of how much of their inventory was going bad. They had to quietly restate their financials for the first 3 quarters of the year. The CFO said on the call, quote, "We identified an additional material weakness related to controls associated with the accounting for inventory provision," unquote.
Wow, so they were basically overvaluing unsold fake meat all year?
Pretty much. And here is the structural consequence of that. Because they are late filing the 10K, they automatically become what the SEC calls an untimely filer, which means they lose their Form S3 eligibility for a full 12 months.
Okay, explain the S3 thing for people who do not spend weekends reading SEC rules. That is the shelf registration, right?
Yes, it is the fast track. When a public company needs cash quickly, and S3 lets them issue new shares to the open market almost immediately. Without it, you have to file a much longer, much slower form with a ton of SEC review.
Jeez. So a company burning roughly $50 million in free cash flow this quarter just lost its ability to raise capital quickly.
Exactly. They survived Q4 by hyper-diluting the stock, but they just accidentally locked the door to the emergency exit for the next year. It is a massive operational failure.
It feels like everything is unraveling at once. Because speaking of operational failures, operating expenses basically doubled. And there's this huge chunk, almost $39 million, just listed as a litigation-related accrual.
$38.9 million, yeah, and zero explanation in the press release of what it actually is.
Which is wild. Like, is it the fight with their co-manufacturers? Is it the consumer class actions over their protein claims? I mean, nearly $40 million is a massive sum for a business that only generated $61 million in revenue this quarter.
Right. It's more than half their top line just vanishing into a legal black hole. They're taking write-downs on factories, writing huge checks for lawyers, writing off operations in China, which honestly brings us back to that beverage pivot you mentioned earlier, because it's not just a random product launch.
You mean BYND, the clear protein drink?
Right. They are specifically targeting GLP-1 weight loss users. The CEO literally called it out, because if you're taking appetite suppressants, you lose muscle mass and you need clean protein.
Oh, that's actually brilliant. Tragic, but brilliant. They're essentially admitting the burger phase topped out. I think Ethan Brown even said he looks at the recent resurgence in red meat with a mixture of sadness.
He did. Sadness for the consumers, right? But the reality of this pivot is messy, too. They went direct to consumer on the BYND test kitchen, tried a heavy 20-gram protein version of the drink, and it bombed.
Wait, it bombed?
People hated the taste. The CEO admitted it was, quote, highly polarizing. They had to go through like 6 or 7 iterations to dial back the sweetness, and now they're pushing a 10-gram version instead.
So they're retreating from the supermarket meat aisle to try and sell reformulated diet drinks on the internet.
That's the bull case right now, yes.
Wow, okay. So where does this leave them heading into next quarter?
Flying completely blind, honestly. Management actually refused to give any full-year guidance for 2026. They only offered a first-quarter revenue target of roughly $57 to $59 million.
Which is still a step down from the $61 million they just posted.
Yeah, exactly. The CFO flat out admitted they are dealing with, quote, elevated levels of uncertainty and very low visibility. They told investors they just cannot predict margins until the core category stops shrinking.
You know, stepping back, it really is kind of a classic cautionary tale. They started out as this massive visionary disruptor trying to save the planet. And now they are just fighting for internet sales against generic diet shakes. It shows how punishing a cultural shift can be when you are stuck with all this factory overhead.
True, though I will give them a little credit here. Acknowledging your core market is dying and actively trying to pivot takes some harsh realism. They did resolve the immediate bankruptcy threat by kicking that debt down the road to 2030.
Well, by multiplying their share count by 5, sure.
Right. Staggering dilution, but they are still breathing. The problem going into next quarter is entirely about execution. You're launching into a hyper-competitive beverage space while your internal accounting controls are failing.
Yeah, the cash burn is the real clock here. Since they lost that S3 fast track to raise capital, if BYND does not immediately connect with those GLP-1 users, they are kind of stranded. It feels like they're betting the house just on proving this new identity works.
That is exactly it. They bought themselves a very expensive, very weird lottery ticket. Now we just watch the cash flow to see if it pays out.
A sad, lightly carbonated lottery ticket. I love it.
I think I'll just stick to black coffee.
Probably safer. All right, that is our take on Beyond Meat for today. Thanks for hanging out with us, and we'll catch you after the next call. If you want these breakdowns to just naturally show up in your feed, hitting follow on your app is the easiest way. And as a quick aside, this entire conversation is generated with the help of AI, which is how we can actually synthesize an 80-page filing into a short chat the exact same day it drops. We are always tweaking the format, so if you have a ticker request or just some feedback, shoot an email to earningsunscripted@datamadness.ca or find the X link in the show notes.
Yeah, send us the hard ones.